Hello, everybody. Everybody on YouTube, everybody in the virtual trading floor. Hello. Is there anyone out there? Hey, there we go. We got a couple people here. What's up, gang? I don't know why I'm feeling a little silly. I feel like I need a good night's sleep. I'm going to see Blue Man Group tonight. Which I know has been there. Penny. I know it's been there forever. I've never seen it. It's right in my neighborhood too. I Yeah, I bet it's gonna be a good time. About a year ago. I don't go to a lot of like Broadway or off Broadway shows or anything like that. Um, but I live right by another theater. I live right by where the Blue Man Group thing is, and Stomp. If you ever heard of Stomp, that's also been there forever. But they dropped it last year. Last year was the last year, and I had like Stomp is like on my corner, and I've been in the same apartment for a long time. Never went. When I saw that they were gonna end it, I was like, oh, let me grab a couple tickets and go see it. And that was a good time. So I saw that like a year ago. Blue Man Group tonight. Should be fun. Should be fun. Let's do a disclosure. I am an associated member of T3 Trading Group, which is an SEC registered broker and dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. I am out of Google. I am out of Amazon. Whoa. How did that just happen? I'm out of Google. I'm out of Amazon. I got into very small Roku today. I'm in Palantir. I'm still in some arm from yesterday. Kind of trading that a little bit. Uh, just noticed that Bob is not on there, which means that sometimes this is hard to keep track of. I'm in Baba. I don't have Baba on here. Oh, and I'm out of Path. That's what's different. Hold on. Hold on, everybody. Hold on. All right, I'm out of Path. I'm in Baba. That's the correct updated disclosure. All right. Let's go to the videotape, as they say. SPYs up 0.75%. Qs up 1.3%. IWM up 0.8%. So real strong day across the board. Definitely some outperformance in the NASDAQ. Yeah, definitely some outperformance in the NASDAQ, led initially by Google very early on this morning. But like I'm saying, pretty broad strength, depending on, regardless of what index you're looking at. We gapped up pretty nicely with the SPYs and the Qs. The IWM was a little bit relatively weak. That actually started with our 8:30 number, pre-market, that jobless claims number, which was perfectly in line with continuing claims. Was a little bit light, helped to boost us up at 8:30, and we were set for a decent gap up. So when you have a decent little gap up like that, it needs to have some correction most of the time through time or price. This is primarily a time correction with a little bit of price. See, this is why, as I look at this pattern here in the beginning of the day, let me turn my camera on for the YouTube people. I have my hood on today. So I'm just a stock trading hoodlum today. This is why, by the way, the ADMA is so important. The ADMA is so important, and understanding extension on different time frames is so important, because you could easily look at this pattern here in the first 15 minutes and say, hey, this is a pretty bullish pattern. It's a bullish tightening pattern. It's a bullish pennant. I want to go along this pattern. But that fails. And I find that those patterns fail a lot when they don't have equilibrium catch up. That might not be true if you're trading like an earnings name. If you had something that has some real significant news, or there's an earnings report and you get this pattern, the ADMA is still far away, that could be a good momentum trade, sometimes higher. But I find that when you have good technical continuation patterns, like a wedge like this or like a bull flag, and you don't have equilibrium catch up yet, that the move fails, or even if the move eventually works, which it did, you're getting stopped out first because there's a deeper pullback or a deeper correction of some sort, and then the market actually works its way higher. And this is what happened. Um, the market broke down at that time, but it just corrected a little bit deeper, went sideways. The ADMA caught up. Once this ADMA caught up, that's when we were able to break higher and actually lift up. This pullback here at 11:05, 11:10. I mean, I don't remember what happened that caused this, but out of nowhere after 11 o'clock, we had a real big pullback that was also immediately negated, and then we kind of stayed strong the rest of the day. The Qs are a very similar pattern, just with some relative strength. Opening strength, that strength fails and breaks down. Even if you're long for momentum versus the opening low, you're getting stopped out. And that's just because you need that equilibrium catch up. So you get this price correction into the equilibrium zone. Little pre-market kind of base here off this, not pre-market, early market kind of base here off the ADMA, off the equilibrium zone, and then we eventually break our way higher. The pullback in the Qs at 11:10 was not as deep as the SPYs because of the relative strength there. Then eventually we broke above yesterday's high, which is really significant. We can look at daily charts in a second. And then the IWM, you can just see the relative weakness. Selling for the first 15 minutes, we've seen that before, but then catching a bid here, kind of going sideways, and not having an unhealthy day. I'm glad that the IWM was able to get above 185. It looks just fine on the daily chart, but after yesterday's big upside tail on the daily, it just makes sense that the IWM is needing more time. And what I'm describing here just right now with knowing the upside tail on the daily from yesterday in the IWM, that's a lot of how I'm trading. Like, as I analyze any small time frame pattern, I'm analyzing it with a view towards the daily chart. And usually I have what that daily chart looks like kind of memorized. But if I don't have it memorized, I also have multiple charts and multiple screens, and I can see the daily chart at the same time as I'm seeing the 5-minute chart. But you want to make sure that your big picture technicals for the indices like the back of your hand, because it's just such an important layer of probability overall for the market. SPYs here, not an inside day by a little bit. We actually were able to get above the negative Maribozu high, so that is really good. That's really solid. Even if it was an inside day, their percentage retracement of yesterday's candle is definitely bullish. And we talked about it again in the morning meeting, because yesterday technically was another kind of breakout failure, especially if you look at like the IWM, SPYs, maybe not so much the Qs, but it was another breakout failure for the market yesterday. And the thing about a breakout failure or a breakdown failure is that it can set you up for a move in the other direction. The interesting part about this consolidation, and we've been in a consolidation for like 3 weeks now, and the thing about consolidations generally is just when the market is looking best is when the market usually goes down, and when the market's looking worse is when it usually goes up. So it's not that unusual to see the price action we've seen within this range, where we've had multiple like false breakouts, false breakdowns over the course of the last few weeks that then have manifested into absolutely nothing. And a lot of that, I think, has to do with the fact that in this week, and haven't seen a new update on it since Tuesday morning, but I'm sure it's still somewhat similar. We are just in an environment right now of historic long gamma, and basically what that means is when the market goes up, the dealers, the market makers are forced to sell to keep themselves hedged. When the market goes down, they're forced to buy to keep themselves hedged. And when the numbers is great as it is right now, you would need a massive amount of buying or a massive amount of selling to overwhelm that dealer gamma to truly be able to break out or break down. So the number that we saw on Tuesday was $10 billion per 1%. So that means that in a 1% up move, it's gonna be met with $10 billion worth of selling. In a 1% down move, it's gonna be met with $10 billion worth of buying. So is it possible for the market to break out? Sure, it's possible, but you would need a real event that can cause so much buying or so much selling to come in that it overwhelms that $10 billion that's going to be coming in on their side. And maybe the jobs number tomorrow is that event. We'll see. And again, I still do believe that time is a bull's friend. So I didn't really think that we were going to break down today off of yesterday's candle, even though we closed so poorly. I also didn't think we were really going to be able to break out today either. I was just expecting kind of continuation of this range-bound price action. But if you are a bull, you should be happy, I think, at the percentage retracement of yesterday's candle. The fact that the SPYs were able to basically get to yesterday's high, the fact that the Qs were able to get above yesterday's high, and even the IWM, which was weaker today, now has time corrected. I think it was yesterday morning when the IWM was trying to break up. I was like, okay, if we want to have a lot of momentum here, this IWM could go, it could give continuation, but it should be noted that this ADMA hasn't really caught up to the base yet. And actually, this goes back to what I was just saying in the beginning of the afternoon meeting about the SPY chart on the 5-minute, when I said, hey, look at this little pattern in the first 15 minutes of the day on the 5-minute that fails. It's a bullish pattern, it fails. Why does it fail? Because these bullish continuation patterns have a higher probability of failing when you don't have equilibrium catch-up yet. And that's pretty much what happened on the daily chart with the IWM yesterday. That ADMA hadn't caught up to the base yet. It doesn't mean that it has to fail. It just means that there is a little bit of a lower probability of success of the breakout, or a little bit of a higher probability of a failure of that move. So it's not that surprising to see, again, when we spoke about this yesterday morning, that maybe the market's not ready yet, that it actually did fail back down. But overall, the IWM is holding in great. The Qs were relatively strong again, so it was a new normal. But I still think that this last few days of price action, we've had a couple days here where the Qs have outperformed the IWM. I think it's okay within the context of the extension that the Russell was trying to satisfy from the two massive upside days that it had to start December. So now I think actually things become even more interesting, because this ADMA on the daily chart has totally caught up for the IWM. And the Qs are looking good. The SPYs, that 21 EMA has slowly been catching up. I keep saying it. I've been a broken record. Time is a bull's friend. We saw in Pat's note this morning, the technical analysis portion of his note. I don't use Bollinger Bands, but that mid-Bollinger Band is basically the 20 simple moving average, and that now has also caught up to the price action on the daily chart for the S&P. I think Pat's note, mentioned his astonishment at the fact that that 20 simple moving average, that mid-Bollinger Band, was able to catch up to 100 handles of market extension entirely through time without any price correction there really at all. And I echo those sentiments of his. It's been an interesting environment as we've continued to go sideways. Maybe this market did get a little bit ahead of itself in November, but at a certain point here, we could break up and we could start seeing continuation. I think that's what the probabilities dictate. But let's get through tomorrow's jobs number, and then, of course, early next week, we have a whole bunch of other stuff that the market's going to throw at us. I think Tuesday is CPI, Wednesday PPI, Wednesday Fed meeting. And, that's the big picture. As far as the small picture goes, I had a few names on my list. I ended up really not looking at or focusing on any of them. But I can look at them real quick. I think that they turn into non-events. BMY never even triggered. Dollar General failed. Trend trade. This JetBlue worked, sort of, but you had to pay up a lot. You didn't get a huge amount of reward for it. VRNT did work also, but you had to pay up probably way too much to be able to get stock, at least based on the daily chart. And this BIB worked a little bit also, but I don't think it was an easy execution either. And you had to pay up a little bit. It might not have been a great risk reward, and it's a tough stock to trade. So that was kind of the ideas from my list this morning that I had. Again, I didn't actually trade any of them. I almost entirely focused today on just position management of the open positions that I was in, as this market just continues to kind of digest through time. So that's all I got. Docu's trading red now. Docu upticked big initially on its earnings report. Now it's gone red. Lulu is the other one that came out. Lulu trading down, but I think I saw that they announced $1 billion buyback, which is great to see. That's all I got. So I don't really have as much for you guys today. I am happy to answer any questions that any of you guys might have. See a question coming in from Cameron. Hi, Cyril. From Cameron, how has your trading changed in the past week or two as we've been consolidating? Are you trading less or taking specific types of trades, pullbacks versus breakouts? So that's a good question. My trading hasn't really changed too much over the course of this consolidation. So obviously the market itself is a huge layer of probability, and it's not giving us any real, ammo to trade with. Palantir just ticked up. But there's been wide enough dispersion, which is what we talked about briefly in the morning meeting, that there have been plenty of opportunities to trade individual stocks almost every day. So, again, you can look at the SPYs and how tight they've been, or the Qs and how tight they've been. But, I don't know, pick a stock, any stock, and type it up, and it probably doesn't look like this. There's been large dispersion. What does that mean? It means that, yeah, you have a SPY going sideways, but the SPY is a broad index with a lot of components in it. And you've got certain stocks that are performing really well, you've got other stocks that are really weak, and they've been able to cancel each other out on an index level. That's basically what that means. So there have been good trades pretty consistently, whether it was focusing on earnings names or in-play stocks, or just focusing on the right sector on the right day. I mean, I don't know, the airlines comes to mind kind of for yesterday is something that we're looking at, or I know biotech has been something that I've been looking at in the month of December here, and that's been able to give a really big move, even though the market itself has been moving sideways. Or the move of the financials, though they've now rested the last few days. Generally, the financials were having awesome upside movement, whereas XLE is actually breaking down. So my approach hasn't really changed. I'm watching the indices, and I was trading the indices for a while also, but I'm out of those positions right now. So now it's more about finding the individual stocks. And there was yesterday I'm trading the breakout in Beyond Meat. Yesterday I'm trading the breakout in Upstart. Yesterday I'm trying to trade the breakout in ARM, though it failed. So those opportunities I think are there. At the same time as that, I don't mind range bound markets. I've talked about the strategy that I implement a lot of, after I have the core position to, buy and sell around that core position, basically for cash flow, and the different ways that you can do that, whether it's, selling into extension and rebuying equilibrium to keep the difference, or just doing it incrementally, selling whatever 100 shares every 25 cents up, or every 10 cents up, and then rebuying it every 25 cents down, every 10 cents down, or maybe it's more like 50 cents or $1 depending on the expense of the stock. So what that can do is when you're stuck in these range bound markets, where maybe if you're buying the SPYs, your breakouts aren't working. And again, it's with some individual equities, because of the dispersion, I think certain breakouts even have been working. But even if the entire market looked like what the SPYs and Qs look like, I'm fine with that, because some of my game plans for my open positions basically just have me systematically and incrementally selling as the stock moves higher and buying as it moves down. So if I've got a stock that is just staying in a range, and that range is $1 range, and I'm buying and selling in 25-cent increments, then every time the stock moves 25 cents within that range, I'm putting $25 per 100 shares in my pocket. So I'll actually take that sideways range bound action all day. It's never going to be where I make the most amount of P&L, but it's an environment where I'm usually able to put away some steadier amount of P&L on kind of a day after day basis, while we wait for the broader market to break higher or break lower. So appreciate the question there, Cameron. Yeah, no problem. Mike Reed had a really cool, I don't know if Mike's here, document that he shared with everyone after the afternoon meeting yesterday, with where he's been going in, I guess, to some of my afternoon meetings and time stamping like certain lessons that have come from those afternoon meetings, which is really, really cool. So in case anybody missed that yesterday, I'm going to copy and paste it here into the VTF, and he's kind of breaking it down into different. That is the right one, right? Did I post the right one? Yeah, good. Whew. Thought I posted a different one for a second. So he's kind of going into the afternoon meetings and like finding these lessons and highlighting the timestamp on it and then adding it to the spreadsheet. I hope Mike keeps doing that because I think this is really cool. And if anybody needs some extra lessons or extra work above and beyond what I have in my training program classes, we do these afternoon meetings every day. You could probably go in and find some cool lessons in there as well. What else, guys? Anything else? Anything else? Well, I'm happy to do a quick one today because I got a hot date tonight. Going once. Going twice. Sold. Alright, quick afternoon meeting today. I hope everyone enjoyed the conversations with the pro trader I did with Greta yesterday. If you didn't, you can go back and probably watch the replay of it if you missed it or whatever. And that could be an extra fun thing that you could do tonight. All right. Have a great night. I'll see you all tomorrow. Oh, yeah. And happy Hanukkah.
Hi, Derrick. This is Jenny, Dr. Borsach's office. I'm calling you because Dr. Borsach says that you need a colonoscopy to be scheduled probably on December 19th. Please call us back at 212-794-0210 to schedule colonoscopy.
Thank you for calling Gotham Gastroenterology, a Summit Health company. If this is a medical emergency, please hang up and dial 911. Please